Just checking. Let me know if you can hear me. Just checking. Give me a comment if you can hear me. If there. Okay, I'm assuming you can hear me. So, anyways, we are going over our economic data right now. So we have our hourly earnings that came out for today, 0.4%, expected 0.3%, and then non-farm unemployment change at down 92,000. Retail sales 0.2%, expected 0.3%, and then we had what do we have? Unemployment rate 4.4%, expected 4.3%. I think it's going to have a little negative impact on the marketplace here. Not sure if we are getting a stream here, so just give me a live comment here. I saw some viewers in there, and I'm not sure if you are still in there right now. So just give me a response. Let me know if you can hear me. If not, I'm just going to continue on here. Anyways, let's get over and start with, we had some earnings yesterday. Costco came out yesterday after the close. Kind of a non-event. I think we had some raising target price to 11.27. I saw out there yesterday. So Costco is just still chugging along like it normally does here. So let's. I'm going to start out with something that I've been putting on this week, the VIX. So you can see the VIX is really spiking up here right now. This is a 4-hour chart we're looking at. So when the VIX spikes, it has a negative impact on the equities. So one thing we have to worry about right now is when the VIX gets elevated here. We're looking for certain elevations where it's going to identify, okay, we're getting close to a bottom in the marketplace. So I think that if we could get up into this 30 range, 35, 36 range on the VIX, I think that's gonna probably let us know that we're getting close to the bottom on the market. The market's been pretty sloppy as of now. If you look back here, you can see this is right here. This is from the 29th of October. This is November. This is when we had the glitch in Bitcoin. And then let me just see if we can go further out here. We can go back and just point out where Liberation Day came in back in April. Let's see here. Scroll back here. We can get a bird's eye view. Yep. So here's April. The VIX spiked up to $60. So you spiked up to $60 right there, Liberation Day. Things were very cheap back then. It should have been a very big tell to start dipping your toe in the water to be buying equities there. So let's get into the ES and then the other futures. If you're new to the channel, subscribe to the channel. Hit that like button and like this video. Go down to the more area for the descriptions so you can join our Discord community for live trading. Let's get into... So we tried to push higher in the morning yesterday and everything got rejected down. And so it's stair-stepping lower right now. You could see that right now in the pre-market, everything is falling off. It is respecting some of those lower end levels here. We got December's monthly low. It's still respecting here from December 2025. It's 60.71 and a half. If we lose that, we come down to February's monthly low. It's 67.51 and a half. If we lose that, I think not only are we going to test March 3rd's low, but I think we're going to come down and we're going to go and hit that November 24th low at 68.84 and a half level. And then below that, you have the monthly high from August of last year at 66.39.25 level right there. And again, the same thing on the upside. We keep getting resistance up here at this 20-day SMA at 68.91.41. So you could just see it just stair-stepping lower, lower, lower. So not out of the woodworks by any means. I think that people are suspecting that it's just going to be a longer drawn out war in Iran that they would hope. So let's get over and do the SPY real quick. We're going to try to plow through these real quick right now because it's pretty much, choppiness that's happening all over the place. We are getting some downside today. I think that this February monthly low here on the SPY at 67, 675.78 is a big level. If you don't hold that level when the market opens this morning, you're quickly going to come down here to this December monthly low at 671.20. If you lose that low, you got 667.34, which is September's monthly high for your next level of support. And then below that, you have the 200 SMA sitting down here at 656.05. So you're going to have to watch that level as well. On the upside, if you can get above yesterday's close, 681.31, you can start pushing higher. This lower end regressional trend line here, you can see it was giving us resistance this morning. So I would say that that's going to be a tough level to get through, 683.91. So it definitely looks like we're going to get some downside this morning here. So let's take a look at the NASDAQ. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video. NASDAQ, same thing. Below the 20-day SMA. Tried to get above it yesterday morning. Failed at 20-day at about 11:15 yesterday. Tried to get above it yesterday afternoon. Big push in the afternoon. And then you can see right now we're failing it in the pre-market here. So if we pop up again into that level right there, I would say this 24,988.70 or 22 level, you're going to probably get some resistance there. So watch that level. And then you have this point of control level that I had here, 24,901.76. It seems to be respecting that level. So I would say that that's the first level. You're probably going to get resistance. It looks like you're getting that right now. You got some support down here from September 22nd. It's 24,680. I would say though, we definitely penetrated yesterday's low. So I would say that that's going to be a line in the sand right there. If you lose yesterday's low, 24,767.83, not only will you test that 24,680 level, but I think that there's a good chance you come and test that 24,495 level, which is August high of 2025. And then below that, you have July's high at 24,300. So hopefully we can get a push here. We can regain this 20-day SMA when the market opens. So after the market digests all that data that just came out right now. But so we're kind of chopping around here. If you fan out a little bit, you could just see this just choppiness right here. There's really, not much of a direction in here at all. So I would say that this is a pretty decent level here that you want to hold and get above that 24,850, which coincides here. This is March 3rd's high. So you want to get above that level right there because that would be an ideal, you break this high and then come down and break and retest level, try to hold that level, but it's not holding it. And so now we are losing yesterday's low. So, right now we're kind of, it's kind of trying to find that direction right here, right? So that's with the NASDAQ right there. But I just think that, based on what I'm seeing right here, tried to make the highs, failed, and there's just there's still some sellers in here right now. And I think it's just more or less de-risking right now because of the uncertainty about what's happening with Iran. So let's take a look at the Qs, and then we'll be done here. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video. Qs, same thing on the Qs. Below the 20-day SMA, you could see how it bounced up in the pre-market here at 607.05, which is January of this year's monthly low. You can see we broke it, and it's kind of a retest here. You can see not getting above that right now. And we are also below this February 13th high of 606.14. We're also below right now this high from, where's that high from? Let's see where that is. That's February 17th, 603.95. So we are losing all of these levels here and coming down here to December's monthly low at 600.28. If we lose that level, that's 600.28, I would say that aside from this 596.46 level, I think you come and test February's low at 594.76. Below that, you have this 590.36 level, which is October's monthly low of last year. And then below that, you have a 200 SMA for support of 588.43 on the downside. So the key right now, I think for starters, you're going to want to get about, you have this 20-day SMA sitting right here at 606.94. And then you've got the previous day close at 608.91 that you're going to have to get over in order for some upside to come in for today. So again, if you're new to the channel, like this video and subscribe to the channel, and then go down to the more description area and join our Discord community there. So Tesla, let's go over to Tesla here. So what I started identifying some patterns here. So like right here, here's a pattern on Tesla here. It came down and then it looked like it was finding a bottom, working its way back up, just kind of channeling here and then losing it. Same thing here. Market came back down. Looks like it's finding its bottom, came back up, channeling. And now it looks like it's doing the same exact thing. You can just see, it creates these patterns. It creates these patterns all over the place, right? So lost here, channeling, and then channeling, and then loses again. Now, the reason why you want to look for this downside here is because we are below the 20-day SMA, below the 50-day SMA. So if we were above it, I'd be thinking the other direction on it. So if you followed this, follow the blue line here as I scroll back and follow the purple line. Now, the purple line represents the 50-day SMA. The blue line represents the 20-day SMA. So I'm going to go back as far as I can, and you're going to see, 100 days should go. So now you'll see as the market, so you can see right here, they start to meet. This is your line in the sand right here where they're getting right on top of each other. And that's when Tesla loses it. Okay, we're right up there at that 445 level. And that's when Tesla said, okay, it's done going lower. It's done going higher. Okay, so you can see right in here, the 20-day and the 50-day, the market is above those levels, right? Above those moving averages. So once the price action got below those averages, once we lost this 20-day moving average right here at this 462 level, your longs were over right here until you regain that 20-day SMA. And then as we kept moving further, then you lost the 50-day SMA. So your longs were definitely over. And then, as you can see, it starts stepping lower. So now you're not thinking longs until you regain. So it tried to regain it right here, you could see, and then it lost it right away. So right now, I am not, even though I'm long-term bullish on Tesla right now, I am not feeling comfortable long-term bullish on Tesla until we can get above these 20 and the 50-day SMAs. Here's the 100 also. So right now, what is this telling me? It's telling me that any kind of pop up to the high side, I'm looking for areas to short Tesla now, for short term, that is. Not my long-term portfolio. So you can see as we scroll to the right, as we keep scrolling to the right, it keeps losing its distance, it keeps going lower and lower. So now we are getting, it's starting to get tighter now. So that's something to pay attention to. So just like on the downside, when it got tighter and you lost it, that's when you're like, okay, well, now the longs are over. Well, the same thing you have to keep in mind here. When this 20 and the 50-day SMA get tighter, and they get tighter here, then you may want to think about, okay, well, Tesla may be done on the downside. Now it may be time to consider looking on the upside. But for right now, as long as we're below the 20, below the 50, below the 100, I am looking for, when Tesla pops, I am looking for areas to fade. Now, mind you, Tesla can really move, and Tesla, if it gives you your strength, you could still make money on the upside in a day. I mean, like, look at some of these days we had here. Look at the day that we had, this was Thursday, Wednesday. Wednesday went straight up. Even on Wednesday went straight up. Tuesday was kind of chopping around, but look at Monday. Monday was straight up right out of the box, right? So you can get your up days, but as far as if you're a swing trader or not, I wouldn't be swing trading unless you got your move and you held. I mean, you could see right here last week, you tried to hold and get above the 20, and then you thought, okay, well, here we go. Maybe we're going to hold above the 20 and then start working our way back into the 100-day SMA and the 50-day SMA. That would be great, right? Then you could use this 20-day SMA as a level of as a support level. Okay, I'm going to get long here, and if we lose that level, then I'm going to just get out here, right? So you could have, I'm sure there was a lot of people that got long here and said, okay, well, Tesla's going to make their move back up to the 150-day SMA. Then once we lost that level, I'm sure people, they got out of their level right here, and that probably created a new position, a new short here, right? So that's another thing to keep in mind too, that if we do get a pop over here, these shorts right here are going to scramble and probably have to cover their position. So it could push it up higher really quickly though. So that's something to keep in mind also. Speed zones, that if we do get a pop over here, we could quickly move higher here. So that's something always to keep in mind with Tesla. But you can see right now, downside is coming with most of the marketplace here. You can see everything is pushing lower. What is it, the 10-minute there? It's 15 here. So I would say, like right now, you're going to want to look at yesterday's low for a line in the sand here. You can see if we're kind of holding it right now. So this morning, when you open up, if you lose yesterday's low, I think you're going to come down to this 398.11 level. I also have a nice support level here at this 395.51 level. It's a 200-day exponential moving average there. So that's something I'd like to look for also. You also have the 200-day moving average sitting down here at 391.93 if you do get that continued downside here. So, but it looks like everything is falling off. As far as what I'm going to do today for my strike prices, I am going to start out with today's expiration, which is March 6th. I'm going to start out with the 405 expiration, and that may change. I may start that. We're probably losing 400 level there. I may change this to the 400, and then this 400 put, I may actually change this to 395 based on where we're at right now. As a matter of fact, with the market falling off the way it is right now, I am going to do that right off the bat and change this to 395. So you can see the premiums closed at $1, just right at about $1. So with the market falling off and we close at 402, we're down right now for about $3. This will probably open up in the mid twos, maybe close to 3. But again, it all depends on where the market opens. We still have another 40 minutes or so till the market opens. So this could pop right back up. But we are below yesterday's close. So as long as we're below yesterday's close, below the VWAP, I am looking for pop and fades, right? A pop and fade meaning the market pops up. I look for a level to short, right? Yesterday's close, that's a level to short. If we move above it, I get out of my trade, right? And so then as far as my calls, I'm going to now change this to the 400 calls. And these are all expirations for today. Now you can see that this closed at $7.60 yesterday. When the market opens, it's going to open up significantly lower, probably in the $2 range, right? Because it's expiring today. I'm also going to see how volatile these premiums are when the market opens. So when the market opens, if they're too wide, too volatile, I am then going to switch to Monday's expiration. And Monday's expiration, I'll have the 410 calls. So they'll give me a little more spread here. And then I'm going to have I'm going to probably change this to the 395 based on the selling right now. So I'll have the 395 puts on Monday. So you can see that where these closed yesterday, the puts based on the sell-off that's happening right now, this premium price will open up higher, I would imagine, in the $3 range. And this call price at 410, let me see where we're at right now. I'll probably change this to 405. So it gives me a little more room till Monday. This closed at $6.10. This is going to open up probably in the $3 range, maybe $4 range, because we still have 2 days till expiration. So it gives you a little more time for the time decay, so the premium price won't be as volatile on the movement. So, but that being said, I'm still going to start out with today's expiration date on the open and see how the premiums move. If they start getting whippy around and the candles are wicky candles, I'll probably switch to Monday to give myself a little more room so I don't get wiped out on a flash candle. You can see yesterday, here's the 5-minute opening range trade on yesterday. And the first, I would say most of the day, till about most of the morning till about 9:30 was wicky, even though the entire day was wicky. You see these big wicks here, makes it very difficult to trade options when you get these big wicky candles here, because you get movement one way, and then when you get a big wick pulling it back down, your premium loses value really quickly. And especially on a day like today when it's 0 DT, your premium prices are going to get whacked really quick. So the theta, theta is the Greek. It's theta represents time decay, meaning that time till expiration, which is 0 DT, 0 days till expiration, which is today. That means that your premium prices are going to fly. They're going to go up and down. So you can make a lot of money, you can lose a lot of money. So you probably lower your lot size on 0 days till expiration, or buy yourself a little more time. When you buy yourself a little more time, though, the liquidity isn't quite there like it is on 0 DTs. So for example, today, if you trade an equity price on Tesla that has today's expiration date, by the end of the day, these strike prices will probably have 35 to 40,000 shares at least traded. And if I go to a Monday expiration date, they'll probably have like maybe a 10 to 12,000 contract volume. Which isn't bad. You don't need that much. So, I mean, you're not, who in the retail industry is trading, more than 1,000 or a couple thousand contracts a day, right? Not even, right? You don't need to. So anyways, that's what I'm going to start out with today. Again, if you're new to the channel, subscribe to the channel, hit that bell over there so you can get future notifications for videos, and then hit that thumbs up button. So like this video. And then if you want, go down to the description area and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. And currently it's free, and we're going to work out some other ways to help pay for the channel, and then work out some other workshops as well. Also, if there's other stocks or other things that you'd like me to cover, if you have other questions, feel free to leave a comment down below. I'll be glad to cover it while I'm doing this video, or I can certainly make another video to cover what you're looking for. However, I do not cover any penny stocks, so pretty much any kind of equities, futures. I don't do any Forex. However, I did trade Forex for about 5 years, and pretty successful with Forex. The only problem with the Forex is where the money is being held. Unfortunately, to trade Forex successfully, you have to use a foreign brokerage house, and money, you never know if the money is going to be safe or not. So nonetheless, again, please subscribe to the channel if you're new, and hit that thumbs up button, like this video. And if I don't see you in the Discord community, have a great weekend, and look for my video I'm going to make on Sunday for the market ahead. And don't do anything foolish today. It's Friday. Don't ruin the weekend. Have a great day. Understand that there's thousands of trades every day, and there's thousands of days to trade ahead of you. Talk to you soon. Have a great day.